Welcome to Winning Wall Street's Money. Please take this moment now with helping me. Click here, subscribe. Next, click this bell. Next, ensure to click all. This helps you receive a notification when I posted my next videos. Next, click this thumbs up button after every time you watch my video. This pushes it up in the engagement ratings and means it will be suggested to more people, therefore is likely to get more views to my YouTube channel. I really appreciate that. I also have a Patreon page. Click show more. Scroll down. This link here, my Patreon, click on it. Select the membership. With this membership, you'll get access to all this information. Very good content. Wednesday, September 29th, 07:33 a.m. New York time. Hello, YouTubers. Thank you for coming to watch this brief video. We'll discuss commodities since it's almost the end of the month for this September, which would be ending another quarter. And then in a few days, we're going to start the last quarter of the year. That's a significant event in the markets and businesses. So we're going to look here on the time frame where the charts are monthly. That means each candlestick represents a month. The current candle on the far right does have 2 more trading days, or 1.5 days to it's completed. But let's look at this now. Commodities are priced in US dollars. We're looking here at the US dollar index. When the US dollar goes higher, that typically helps reduce the prices of commodities. But inverse, with the dollar depreciating, going lower, that would often create prices to increase in commodities. But what can increase then the US dollar? Is it necessarily the commodities to make the US dollar go higher or lower? No. Western nations have central banks. Those central banks set the policies for interest rates. Or in the United States, our central banks, we have several Federal Reserve locations, and they vote on deciding to leave interest rates alone or change them. Well, they control the short-term interest rate. When they raise interest rates, that typically strengthens a currency. There are some countries that have super high interest rates right now, but their currencies are terrible. Well, there's other geopolitical reasons that other currencies are not so good. Not confidence of the investor. So the world is having problems and people want to go to safe haven currencies. The US dollar is considered a safe haven currency. First, let's say create a currency from China or Russia. Yeah, majority of people that are in the know would not want to invest in those currencies. They'd rather put their capital in a safer currency like the US dollar. Well, let's just notice, here's the low of the year for the US dollar here. We're currently almost near the high for the year, the US dollar. But it's not a huge trading range because look at last year. That was the high of last year, trended all the way down there. And then we look back here from 2016 all the way to the low of 2018, 19 down here. Yeah, that's a huge trading range. And that was all from the prior administration, the Federal Reserve policies. This one has only been here less than a year, and it's a tighter trading range. That's good and bad for some people. Okay, now let's go look at the commodities to understand, see if they're trading up or down, and how big of a range compared to what we just saw in the US dollar. We'll first look at the commodities in the energy sector. So the energy sector has several commodities. The 2 most well known are crude oil and natural gas. We'll first look at crude oil. And this is looking at a 5-year duration, and each candle is a month. Yep, and there's different kind of crude oils. There's heavy, there's light. I'll give you an example. Heavy crude oil comes out of Venezuela. Light crude oil will come out of Texas and some parts of Southwest Asia, North Africa. Yep. heavy crude oil costs more money and requires more work to produce it into gas. Yep. And or it's harder to get out of the ground. Okay. So look at crude oil. We're not at an all-time high right now. All-time high was nearly 3 months ago. But we are higher off the low of the year. Here's the low of the year. There's a high. So this has been more trending than the US dollar we just compared it with. Yep, more trending. And look at this. The past few months is more of a consolidation. It's in a range, you might say. The high being the 76.98 and the low 61.90. So now that we determine it's in this range, and even if you want to just look at the low from here, 65, 67, it's in a range. The trading opportunity is, if you don't think it's going to go much higher, you could trade bearish advanced option strategies right here. Yep. You could say maybe $76 might be your trading range that you don't want it to break above. As well as if it declines, you might consider, if it comes down to this range, to reload to the upside. These are trade ideas, and I share them on my Patreon page. You're welcome to join if you haven't yet. Let's look at the next commodity in energy, natural gas. All-time high for the year was here, 6.318. Huge trading range for the year. Here's the low. Here's the high. Huge trading range. Yep. Way above what it was prior 4 years ago. Much more defined of a trading range than what we saw in the US dollar and crude oil. Let's go look at some other commodities. Metals. Most popular metal is gold. Here we go. This was the high of the year. Gold, $1,962.50. And here was the low. So looking here, it's not much of a trading range. It's an consolidation phase. So we could already determine near the 1700 level has been acting as a demand zone where buyers have been stepping in. And the sellers recently, the sellers have been above here, this level, 1834. So if you're bearish gold, that might be a place to consider trading bearish if it retests that. And if you're bullish, well, I just showed you around here. Yeah, there's a chance it may go to one of those price levels between now and the end of the year, between now and today as well too. So we are not at the all-time high for the past years, neither that's up here. But we definitely could determine we're more of an consolidation than trending. Last year, this was a big trend. That was a lot of trending. And from last year's high to this year's low, that was determined as a trend. So if you look at the bigger picture, stepping further back, then you might say gold is bullish because the bigger trend up is bullish. And then one might call this a retracement. And this retracement pulled back and then it went into consolidation phase. That consolidation phase is building a wedge, and in that wedge is building a call. It's going to break out one way or the other. That'd be good if you're on the correct side. And if you get in before it breaks out, so you can ride that trend. Let's look at another commodity, silver. Yeah, there was a high of the silver. It declined. We are now at record lows for the year. Again, you can look at it as a huge consolidation inside the range of last year. Where last year had that huge trading range. But this year we did take out the high of last year. And since the high we declined, doing a retracement inside last year. So you could definitely see how some of these commodities I've been showing you have been trending, where others have been consolidations like the US dollar. So just think if that US dollar starts having a huge trend going forward, up or down in the months ahead, you expect to see that much more defined than some of these commodities that have not been trending. So that gives you an opportunity to consider, wow, you might want to get in some of these commodities that have the opportunity, that are in consolidations that may break out soon. You have to determine your best judgment, common sense, knowledge, insight, and a lot of good stuff. Which direction? Yeah, let's look at platinum. Here's the high for the year, and we declined. It did trend. from the beginning of the year, well, beginning of the year here, trended up and did reverse, well-defined trends. Whereas this last year, that was a tight consolidation. And the beginning of last year was trend. So the two most popular metals were the first gold, silver. Let's look at copper, very important commodity. Copper, used for infrastructure, utilities, appliances, necessary demand for copper, maybe, but definitely is necessary for our industrial lifestyles. So last year, here was a low, and this year was a high, huge trading range. Yep, last year had trend and it continued through. Then we have this retracement, or if you want to use that word, pullback and acceleration. You see, look, that $4 price level has been acting as demand zone. Buyers been stepping in there, pushing it up. And then the sellers around this 450. Very interesting. Opportunities are here. You just need to stay on top of them and manage them. Okay, thank you for joining. And if you liked the video, how about sharing your support by clicking that like? And if you want to know when the next video is, if you click that subscribe and hit that bell, you'll get notification when the next video is posted. Thank you, as always, for spending just a little bit of your time with me. Let me know what you thought about this video, and please let me know what you want to see next. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel. By going below and clicking on my PayPal link, you can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe.